Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here for a Forex weekly market analysis for March 1st through the 5th. Can you believe it? We're already heading into the third month of 2021. Here is our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And also want to remind you, if you haven't already done so, to subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. All right, with that, let's go to our live action screen here. We have the Forex-Trading-Unlocked.com website pulled up. We've already pulled up the workstation page. Let's go down to our chart. We'll get rid of this. We'll get rid of the volume here. Let's move this over a little bit. Before we look at the euro, let's take a look at how the dollar index ended this week. Dollar index spiked a bottom on Thursday and it exploded to the upside on Friday. There has been a monster sell-off in the 30-year Treasury bond. We'll take a look at that real quick. When you want to look at these different markets, on our navigation bar, you go to the Markets tab, and we'll go to Futures down here. And then we're going to go to the menu, and we're going to pull up the 30-year interest rate. And the 30-year Treasury bond is in the middle of rollover. This is the, let's get rid of this volume, make this chart a little easier to read, and get this, oops, no, let's get the daily down. Okay, so the daily had a nice little bounce yesterday, but this thing has been tanking for, obviously, it's been down every day in February except for 3 here, 1 here, and then the last day, or excuse me, on the last day trading day of February. It was, let's see, it started February out at the 168 handle, which I was bearish then, looking for it to test 166. Even when it poked through here, I never thought that this was going to continue to slide from 166 all the way down to literally 157.24, that it spiked low on Thursday. That is big for currency pricing, folks. If you don't watch the 30-year interest rate, you need to start paying attention to that, because interest rates are definitely a function of currency pricing. So what do we have here? We have the dollar index, and we have this downward sloping resistance line that is keeping the downward trend intact. If this correction that we started in January is just a correction for the dollar, then we should start to see this the index flatten out and head back towards support. However, right now, after that monster low that we planted the other day, I don't know. It's wedging, so let's move this, clean this up a little bit. Okay, there we go. So here we have the dollar index, which is planted this low. This is now our base. Anything below here, we will become bearish as far as the index is concerned. But above here, we're looking for a challenge of this high right here. So the market's wedging, or excuse me, the index is wedging. It's buffering up this downward sloping resistance. The other key thing is that should it take out that downward sloping resistance line, it's going to make higher move highs after a higher move low, because this would be this major low here, and this is a major higher move low. So making a high here would have us looking for a challenge of 91.64 in the index. So let's take a look at the euro US dollar, the number one component. You can see that that really fell apart on Friday. So we're looking for a test of that low right there, and we're going to take this trend line right here. As you can see, we're looking to come down and test this little area here. Overall, the euro US dollar has been a bull against the US dollar, and most likely will continue to be in the long run. However, on the weekly, it is now neutral. On the daily, obviously, we've had a short-term uptrend, but now it looks like it's starting to fall apart, especially with the sell on Friday. Now, what do we have here? We happen to have a sell signal, by the way. So this is a bearish engulfing line. So for any of those, and it's also a sell signal. So for any of you that wants to learn how to trade this sell signal, you can read the book High Probable Japanese Candlestick Patterns, like I mentioned earlier, available on Amazon.com. And if you want to check out that book, by the way, you can just go to any of our web pages here, go to the nav bar, products, courses, and services, go down to High Probable Japanese Candlestick Patterns, and that'll take you right there. And then you can figure out how to either incorporate that in your own trading style or follow our methodology. So, but we will figure out something here for you anyhow. So we have this high here and we have this low here. So we're just doing a little Fibonacci thing here. All of you guys are familiar with the fibs. I'm sure. I love them. They're always good. The 50% rule, no matter what, is always a key area. So speaking of 50% rule, look at where that lies. Right there. Okay, so that would be a key area. And then let's put this, there we go. So we'll get rid of this fib. All right. So where we have this upward sloping support line, keeping the trend intact, we right now have a target zone of $1.1974 down to $8.1887. The thing is that if we hold $1.1974 and bounce, this market might start to be ready to set a range trade. I think there's some geopolitical reasons why this will not be so, and I think the euro will be under pressure. I'm looking for it to test $1.1887 sometime between Monday and the following 2 weeks, somewhere over that time. I don't think it's going to just keep on slamming like it did on Friday. However, the 30-year note is on its lows. Gold is also tanking, and oil is rallying. These are all things that are helping to give a little lift to the dollar. Not necessarily making the dollar a bull, but versus certain currencies, it will be. So the euro is falling apart as far as the European sector is concerned, and we have a little divergence going on overall. So this market, I think, is definitely set for neutral to lower for the next week to 2 weeks. Now let's take a look at the British pound US dollar. So we got the British pound US dollar, and we have had a sell signal here as well. This one actually occurred on Thursday. So with Thursday being the lead up, it topped out on Wednesday, and then it really started to fall apart. Now on this day, the euro hadn't really done so. So you can see that the pound did not seem to fall apart as much as the euro did. I think it was playing catch up. One thing that the pound has going for it, besides being in an overall aggressive monthly trend higher, is that oil is helping to keep the pound higher. So the overall trend isn't too bad here. As far as where can we go on a correction here with this, I would say we'll use the fib again here off of this low right there. And let's find a nice little horizontal line. Here's this. And wow, look at that. That's kind of at the upper part of that range that we were stuck in for a while, where we were drifting. All right, so we have some good support here. I think at $1.3681, this would come close to our upward sloping support line, maintaining the trend. Like I said, oil, I think, is going to help the pound overall. As long as oil remains to be strong and making higher move highs, it's going to be really hard for the pound to maintain a sell-off. This is a short-term sell signal here. We have another bullish engulfing line sell signal, and we got some people on the chat here on YouTube and on Twitch. If you guys got any questions, you go right ahead and ask. All right, so we have the bullish engulfing line right here, and we have a downside target right here around this $1.3681. Unless you see a reversal in oil, and especially get it back down to, I would say, the lower 50s, even getting back to the upper 40s, which I don't see that happening anytime soon. I don't think you're going to see a tremendous sell-off in the British pound US dollar. I would use caution with this trade. I would follow through on a couple key rules. This high from set a couple days ago, I would use this as your risk. Do not be short again above here. Anything above here, you're going to have a lot of buying momentum accelerating the British pound US dollar bull. The pound is bullish versus most currencies globally, so that alone means that it's a strong currency. You've got to remember, post-Brexit, the UK no longer has to fund all the ailments that are going on in the EU. It's all on Germany. That's why the euro is falling apart much harsher than the pound is. And also, they don't have oil. So let's look at the US dollar Swiss, since we are talking about Europe. And we made higher move highs. So coming off this low right here, this is our key support line maintaining the trend. We have definitely not only had a head and shoulders bottom that was over here, we're maintaining a nice upward sloping support line here. The low that was planted a couple weeks ago has helped to define the fact that there's 3 flight to quality currencies out there. There is the Swiss, the yen, and the US dollar for the different trade zones. Because of the interest rates that are rallying, because that oil is going up so much, these things are hurting, one, the yen versus the dollar, and also because of the UK leaving the EU, there's more stress on Switzerland and Germany as far as maintaining not just the politics of the EU, but the revenue or the money to float the EU. So this is weighing on the Swiss, I think. So when you think about this, if 2 of your flight to quality currencies are going down versus the dollar, meaning the yen and the Swiss, that means that the dollar is strong because it's a flight to quality currency. If they're bailing out of the 2 other flight to quality currencies, and the treasury bond market is tanking, which is another flight to quality market, not to mention gold, which is a hedge against inflation, which is totally coming into the market and it's tanking, where's your money going? It's going into dollars, folks. Believe it or not, I'm not saying that I'm a dollar bull, but market mechanics is market mechanics, and that is what is going on. So right now, as far as upside targets for the US dollar Swiss, we'd already poked through them on Wednesday and have made a higher move high on Friday. So right now we are a bull. I would say use this last major low as your risk, and this upward sloping support line also as your risk value for looking to buy dips, if you will. I would definitely look to buy a pullback just because I think this one might be running out of gas, but who knows, it could be accelerating. We'll see. Let's go now and look at the US dollar JPY, since we mentioned it already. So the US dollar JPY has continued to make 2 new higher move highs over the last couple days, ending on Friday very positive. This market has been rallying since the beginning of the year. It was an overall bear versus the for a bear market for on the monthly and the weekly up until January, and now it's reversed gears in a big way. One of the main seeds for this is the fact that interest rates are rising, the 30-year note, and oil. Japan doesn't have oil. Oil going up definitely hurts the yen. We have oil. We are no longer going to be a net exporter. We are going to be an importer, but because we do produce so much, we are not completely oil dependent. We weren't at all, but now we are obviously cutting that. That was mandated in January with the new president when he was sworn in. So guess what? Gas is getting more expensive. Oil is getting more expensive. While the oil service industry also will become very inflationary. So continue to see this trend stay intact as the call. I would look to buy dips. Any sell-off that does happen, I mean, you can see there's been some violent sell-offs, but they don't hold very much, and then all of a sudden, boom. Now, as far as an upside target, we're looking for 107.5 up to 108.5 over the next couple weeks, but we're looking to see some swings as well. So I would look to take advantage of that situation. The slope of this trend is rather steep. It's not like the last market that we looked at, but it's maintaining it. So I wouldn't doubt that you come down and see a little bit of a test of support. Only a failure from 104.91 would have us off the rally campaign and put us on a neutral campaign for the US dollar yen. We had a head and shoulder bottom here that is pretty much maxed out its target, estimated target to the upside as far as a correction is concerned. If this is not a correction, which I believe because of the commodities and the interest rate influences, that we have had a solid turn where the dollar may not be a bull against the pound, which is the second biggest weight in the dollar index. However, against the US dollar yen, I think you are going to see continuously the US dollar just smash the yen over the next probably 3 to 12 months, if not the next 3 months to the next 3 years, literally. Meaning, which is good for us as far as buying Japanese goods, because we'll be able to buy them much cheaper. But that's not necessarily good for Japan. Now, for the rest of that sector of the world, we're going to look at the Australian dollar, US dollar, which capped out with a nice big sell signal on Thursday with major follow-through on Friday. This is also a bullish engulfing line right here. All right. sell signal. Okay, so the oil trade is part of this one, so this is going to be a tough one. This overall is a monster bull, this market. If we have a failure from here at 75.63, I think you may see an extended correction. The one thing that really does bother me about this sell-off is that it did make a newer move low after a higher move high, all within 2 days. Is that overly bearish? Absolutely not. What it is, though, is setting this market up perhaps for a little bit of sideways, wide sideways range trading, where it'll be trying to buffer new highs. It did take out the upward sloping support line, maintaining the trend, and close below it and also below here. So this little area here is very bearish for the Australian dollar, US dollar. If the reason that the markets had the move they've had over the past couple days, and it's all because of the bond market collapsing, if dollar support really is going to be the theme for a couple more sessions, then I think you will see the Australian dollar, US dollar come down by 75.63. A failure from here would definitely be very big. I don't really see that happening, however, especially with the price of oil being where it's at. But anything can happen out there, so let's find some numbers here for you as far as some really good support. So here would be our 50%, and here would be our 0.618. Okay, there we go. We can get rid of that. All right. So we got some price levels here for you. So right now we're looking for a target of 75.63. A failure here will have us leaning on 74.97. I would use caution in this area. The only thing is this will be pounding new lows. This is a harsh sell-off. I would expect we're probably going to start to see some digestive trading in this area, probably between 77.25 and 75.63. We'll see what happens. Like I said, if the dollar bulls are really in control right now, and it is interest rate driven like I say it is right now, then I think we could still see the market get hammered even more. But we'll see. Well, right now we have to wait until Monday, or actually Sunday night, and see how things start out. All right. Now we have the New Zealand dollar, US dollar. This one did not give us a sell signal. It did have a reversal, but it did not give us a sell signal. So for this one, we'll put this right here. This is also similar to the Aussie, just because it has a commodity-based driven economy, of which there is rampant inflation in right now, and most likely will continue. This benefits New Zealand. So we're looking for maybe a test of 70.06 down to 69 even. I don't really see it getting all the way in this lower band. I think that we're probably getting ready to establish a range trade. The one thing that kind of, this trend has been kind of, I wouldn't say meandering, but it has aggressive moves, and then it stays and sets a range trade. The fact that it spiked up like this and has fallen back into this area, I think this is probably where the bulk of your trading is going to remain over the next couple of weeks. Now let's look at the US dollar Mexican peso. Like a balloon underwater, this trend pushed up higher on Thursday and exploded to higher move highs, confirming the bullish trend, and then even on Friday it maintained its strength. So let's see, we now have a locked in bottom, we have a higher move low, we continue to make higher move highs. So our directional target right now overall is around 21.5 pesos to 22 pesos to a dollar. I'm expecting that over the next probably 1 to 3 weeks to occur. As you head into spring break season, I don't expect very much more than that. I think you'll probably see a lot of choppiness in that area between the probably 21.5 back down to the 20.5 area, just below where it's trading at right now. So we've already reached our targets as far as the upside when we had a buy signal back here. So now we have to wait for another signal, but definitely short-term bull. US dollar Canada, this is another oil-driven trade, which has been a hard one to follow, but it really reversed gears the other day. So this is where, when you think about the fact, if the oil factor really is so strong, which is definitely helping to give the Canadian dollar strength versus the dollar, I think we're definitely in a bear market and a bear trend. The question is it a sell rally forecast? I think so. I wouldn't get too overzealous with this rally here, but let's see where we can go right now. So if we just look at the initial wave right now, we've already hit through the 50% in 0.618. This is on a short-term daily basis. If we move up to this high here, well, we still have hit the 50% and almost the 0.618. I think that what you really have to do is go back up towards a major high up here to kind of get an idea of where you might go. So let's see, we'll put this, we'll correct the 50%, 0.618. Let's clean this up. All right. So as far as an upside target here for US dollar Canada, I would use a lot of caution with this trade. This thing is such a bull versus the dollar. And even the oil thing, I think, is going to help keep it strong. But downward sloping resistance line, it's challenging that. If we breach this, we've already taken out this high right here. So this is kind of key right here. The fact that we made, after a lower move low, because here, the high here was, let's see, the high here, it was $1.2746.3, and this was $1.2747.8. So it barely made a higher move high, but it did. So now this low right here becomes our support base. Anything below there, definitely you do not want to be long. As far as being short, I'd be careful right now. Look for a test of the previous highs here. Should we take out this high, I believe you'll start to you'll blast up to this $1.2948, and then probably start to chop around below $1.3057 and digest a little bit. Remember, right now this market has made this low it just came off of was another lower move low on the trend basis, on the weekly, on the monthly, on the daily, on the hourly, on everything. So we are just recently turning on the hourly, on the daily, with a short-term reversal signal in the market, and it's also fighting against the trend. You usually want to take signals that go with the trend. They give you a higher probability. We are not trying to call a bottom here by any means, and with the conditions of oil and stuff like that, it's hard to believe that the US dollar, even if it's a very strong bull, is going to turn that far and that hard against the US dollar Canada. So I want to also look at the XAUUSD real quick and show you something. If you look at this, this market has been tanking and making new lows. It did so on Friday and etched that out in a big way. This is going to impact the Japanese yen. This is going to impact a bunch of other currencies as well. If you see the gold market trending lower continually into Monday's trade, into Tuesday's trade, and Wednesday's trade, it's going to be very hard to not be a dollar bull. So I just want you to be very mindful of that, and then that would also give us a chance to really jump on this euro US dollar signal, which you can get in around the close of Friday's price, somewhere around there. Your risk is the high from Thursday, and right now you're looking at a very low risk sell trade to probably, if we can unwind the dollars that strong, getting down to $1.1887 shouldn't be a hard play. So you're looking at almost a $2 move, and you're looking to risk. Well, the risk here is pretty high though, because you got to risk up to $1.2244. So maybe look for some options plays in the futures or even the binaries. Remember, if you're trading the futures, watch out because it's rollover. Make sure you trade the June contract, not the March contract, unless you're trading the options, which is a little bit different story. Would depend on, but also depending on your time frame, because you do have to be mindful of that. So hopefully you've gotten a lot out of this webinar. We don't have any questions out there because it's also the weekend, so that's usually when we're on the weekend. We don't have very many people chiming in. So I want to thank you very much. Please remember to subscribe to our YouTube and Twitch channels, Forex Trading Unlocked. And if you want to learn how to trade those Japanese candlestick patterns that we were talking about during this webinar, read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. You can check it out at our website, forex-trading-unlocked.com, and read a little part of it for free. Just go under the products, courses, and services, and you'll be able to pull up the link to that page that has all that info. And outside of that, I want to thank you very much. I'm Teddy Keckstedt from Forex Trading Unlocked, your key to online trading, Forex trading, and also want to see you soon next week. So we'll be back with some more videos on Monday and